Hey everyone, welcome back to Crypto Cash. Thanks so much for joining me here. Happy Sunday to you. Hope you're having an amazing day. We're taking a look here, of course, at Bitcoin. Just kind of seeing what's going on with the charts. We're going to look at some monthly closes and weekly closes, kind of see what that looks like, as well as some backend data, of course, here from High Block Capital, and just generally understand the overall state of things here, because it would make sense for the price to pull back a little bit, at least to the monthly open or close. And what we want to do is kind of look at a few handful of factors, okay? So we're going to look at that and much more if you're new to the channel. Now a financial advisor, love to teach people trade. Hope you can learn something here today, of course. And if you want to become a better trader, cryptocash.tech is the website link down below. And obviously, if you want to just be part of something better, we do have Trading Signals, Academy, and of course, Community, where we're doing day trades and long trades as well. So really cool stuff there. All right, so here's what we want to look at first and foremost. Just to quickly peek, there's no real CME gap that we need to worry about, right? So they've all been filled, minus the obvious one here, down at 20 to 21,000, okay? So just keep in mind, we are not super concerned with the current price action where we're at for a massive pullback, at least with an expectation to try to fill that gap. It does typically happen, but at this point, nothing to worry about. Bitcoin dominance, we want to talk about this here just briefly. Bitcoin dominance has stayed above this previous resistance level, so we can assume that to be a new support. I know it seems kind of crazy to kind of think of dominance as a support and resistance zones, but generally speaking, this tells us that altcoins are less likely to surge at this point because the majority of folks are holding Bitcoin over altcoins. Okay, it's really just a mentality thing. It's not that huge of an issue. It doesn't imply that altcoins cannot increase in value. It just tells us that we're not really in this potential situation where altcoins will likely take off, if you will. All right. The first thing I want to recommend paying attention to is, of course, Ethereum. That's usually the catalyst there. When altcoins start to do really well, you can see Bitcoin and Ethereum very, very strong, or at least Ethereum stronger than Bitcoin in most cases. That's kind of the starting point. Something to pay attention to that. And then also, just taking a quick look here at altcoin dominance, as you can see, it's coming down. Big surprise, that's the inverse, essentially what happens when Bitcoin dominance increases, okay? So just some things to kind of think about there. So we'll look at the charts here in just a minute. Let's jump over to High Block Capital, see what's going on. We can address here a few things. First of all, the global bid-ask spread ratio. We're seeing a lot of shorts entering the market, okay? In other words, this isn't necessarily, in truth, this isn't necessarily people shorting. It could just imply that people are trying to sell and take profit. Okay, so keep that in mind. There's a distinction there. But the bottom line is folks are trying to take profit here at this level. We can also see that the amount of whale versus retail is coming down. In other words, retail traders are trading with a little bit less volume today than they were a few days ago. Another thing kind of telling us that the whales are hanging out on the sidelines and they could have a massive move here soon. It would make sense for the price to pull back a little bit before it increases, but I'm definitely, overall, the sentiment I would say is absolutely bullish, and I would not try to short too much. Again, smaller targets would be appropriate if you're going to do that. That being said, if we take a look at the net longs, we see a lot more longs getting closed in the last 48 hours, and oddly enough, the same thing with shorts too. This happens on weekends though, so try not to get overly concerned about that or read too far into it. Lower volume on the weekend as well makes perfect sense. You can see these 5 trading days throughout the week and 2 weekends, right? So low volume on the weekends, that's why volatility is higher and typically not always recommended to trade on the weekends. We can see here, when we take a look at some long positions are underwater at 30,900. We can see, I think shorts are actually probably in the green, if I'm not mistaken. Majority of shorts are in the green. We do have some late shorts here at 30,500. So careful being a late short, but on the same accord, this could be very well a situation where the price is starting to pull back just before the Asian markets open later today. We'll see, of course, what happens with that, but for right now, this is kind of where we're at here for the moment. Okay. So again, we got some of our previous Fibonacci retracement levels up here, by the way. Keep in mind, we can draw out some smaller ones in shorter time frames. We'll look at the 4-hour and kind of maybe see what that looks like. But I'm fairly confident that Elliott wave will tell us that we're expecting some kind of pullback. So we had some decent increases. I think we've hit our 1, 2, 3, 4, 5, and we should be on our ABC way down. Okay, so we'll take a look at that. But for the most part here, if you're kind of curious why we have this the way it is, we're trying to get some larger Fibonacci retracement levels. We can see 27,700. Sorry, I misspoke. 29,700 is essentially that support level there, based on previous resistances here and just being a Fibonacci 0.786 level. Okay, so I would say if we're going to have a pullback, 29.7, 29.8, right in that range seems appropriate. Okay. That being said, let's take a quick peek over here actually at the weekly and monthly closes. Just talk about this here briefly, because when you have a previous month high, that's commonly retested as a current month low. So this last month, effectively, 29,851 was the high. this could very well be a retesting point this month. Okay, now it was already retested the day after. That's standard, of course, but it makes sense for that to be the pivot point, the bouncing point, before the price takes off. So to me, I would say a good long at about 30,000, 29,850 would be appropriate, or a short until then as a potential reality. Again, there's no guarantees, but today's candlestick is not looking great. We've got a gravestone doji, and it would make sense for the price to gravitate towards last month's high. We look at the weeklies, all sorts of, I wouldn't say nonsense, but it's nothing we really need to concern ourselves with because that's so far ago with the price shooting up 25% in 2 or 3 days. We're probably not going to see those kind of levels, at least immediately. We've got to see if 29.8 holds as a support first. Okay, just keep that in mind. That's kind of where we're at there. All right, so let's go ahead and go through the usual stuff here. Let's see what's going on. RSI, we are kind of retesting 70 on the RSI. I would like to see the price come down below this. So in me personally, a buy-in at 30,000, 29, 28,000, somewhere in that range would be perfectly fine. Again, dollar cost average is perfect in this scenario, or potentially shorting to 30,000 makes sense. Okay, again, it's just the bird's eye view though. I'm not telling you to do that. We haven't looked at everything. But generally speaking, the consensus here is that things need to calm down. It jumped up to too quick and too short amount of time for it to warrant this kind of price point for a long period. Now, granted, you look at its history, it can keep going, don't get me wrong. There's a lot of good stuff in the market. In fact, be sure to check out our Twitter. We got some really cool, well, not only giveaways, but there is some really awesome things you got to kind of focus on. We got like, BlackRock, JP Morgan, Vanguard, like all this ETF stuff with Bitcoin is huge. And it's going to open up with this regulatory stuff. So just keep in mind, that's a very positive thing. So again, shorting into that may not be the most effective thing. But it does make sense for us to pull back a little bit. We can see here the MACD is starting to lose its momentum. That doesn't necessarily mean that we're going to just drop, but it does imply that we should lose 70 on the RSI and start tapering off closer to 50. I would like to see that personally. And honestly, the price doesn't even have to decrease for that to happen. It just needs to go sideways for some time. But a decrease would make more sense considering how much meat's on the bone here. And knowing the Asian market, there's a great chance you're going to take some healthy profits here later today. This is just my speculation. So I'm anticipating a pullback just in general here. That being said, looking at the 4-hour, let's address the Elliott in the room, or elephant in the room. Take a look at this here. This is basically Elliott wave. We got a 1, 2, 3, 4, 5 pattern, and we can see an ABC on the way down. So we've hit our lower low and our lower high tentatively. Now, lower high may not be officially in, but we waked up to 31,000 yesterday or late last night, if I'm not mistaken, and the price is coming back down. So hypothetically, this continues to fulfill itself. We will see the price pull back down to 29,850. Look at that, almost exactly the 1 week, the 1 month high, or potentially even further, 29,100. Those are both levels I've addressed in the past that are extremely important to recognize. Okay, so to me, 29,850 / 29,100 are two extremely important pivot points that we want to see hold. Initially, obviously, we want 29.8 to hold because that would make sense. But of course, even further down could also be the case. So just keep in mind, that's roughly where we're at there for the Elliott wave on the 4-hour. Now, when we take a look at a few other things here as well, we can see that we're no longer overextended. We're just kind of naturally consolidating in this range. We can also see here with the MACD and basically the RSI, we've got the price action coming back down. This is normal. This is the way it should be. Okay, so ideally, we want to see that pivot point at 29,850, right there at the bouncing point at 50 on the RSI. Again, that's never a guarantee that those are going to happen, but that's something that you want to pay attention to. That'd be an awesome place in which to possibly consider a long position. If we don't hold that level, again, 29.1 would be the next alternative to that. Looking here, we've got a pretty strong MACD divergence. That's still continuing. I wouldn't bet against that just yet. It seems a lot larger than it is because honestly, we just had such momentum at the upside. Any little correction will look pretty large. When we take a look at the moving averages here as well, we're currently holding the 20. Once we lose that, though, we'll probably be on the wrong side of the tracks. We'll start to taper closer to the 50-day, which will probably average itself out at 29,850 in the next 12 to 24 hours. Okay, so again, we've got some positive stuff here overall. It's definitely not detrimental, but it feels like we're going to see some kind of pullback, just generally speaking here. Again, that's just my opinion, my thoughts. You don't have to take a trade based on that sentiment there. But again, if you want to be like part of an automated trade scenario, we've got awesome trades for day trades and swing trades here, just based on automatically following the trades through Cornix. Be sure to check that out. I've got instructional videos and stuff, of course, but that is something that we offer through our community. Now, the last thing we want to look at here, of course, TD sequential is not going to tell us too much. We are at a 9 right now, and you'd be kind of like, oh, well, we're just going to bounce because of that. Not necessarily. We are establishing lower highs so far. and parallel lows. Oftentimes when you see that, the price action will effectively break down, but you got to keep in mind, it did originate from the downside. There is potential for it to break up too. I know that seems kind of contradictory. It's like, oh, it could break up or down. That's naturally what happens though when you work yourself into a tighter little scenario. A lot of times Bollinger Bands will tell you once you start to compress like this, then there's a good chance the price will take off in either direction. To me, just based on overextension and some previous things we've addressed, it makes more sense for the price to pull back and go down. But I would love to see it go up too, right? I mean, there's nothing wrong with building our portfolio and having that grow and getting those profits. But again, it just makes tremendous more sense for the price to pull back here, even though we're overextended-ish going into this support level. But again, more often you test a support level, more likely it is to break to that direction. So I'm going to put my money a little bit more towards the downside, at least to the 29,850 range. Potentially, again, alternative to that 29,100. Okay, so again, that's just generally what we're looking at there. Neither good nor bad. It just kind of is what it is. Last thing least here, or last thing we want to touch on, is the Ichimoku cloud. Now, keep in mind, range bound activity. You can get some false positives here, but the fact that we're just treading water right at the cloud, and that the conversion lines below the baseline, lagging spans, and intersect the price action. These are all the things that are kind of factoring us in here, letting us know that if you have a long position open, you should have taken your profits by now. That window is closed, that momentous trend. That said, momentous trends typically reverse and go the other direction once they're done. So 2 and 2 makes 4, right? To me, it makes more sense for the price to come down than it is to go up. Again, I hope I'm wrong and the price goes up. That'd be great. You want to be careful betting against the market, especially with all this wonderful ETF regulatory stuff. But it would make sense again to get just a little correction before the next leg up. So to be clear, I feel Bitcoin will continue to rise and increase and start to hit some larger levels. I'll take a deeper dive here soon, as well as what those levels are, so we know exactly what to focus on. 32,000, if I recall correctly, is the next major key level. And then, of course, we also want to address the fact that the price action should and could continue lower, and if it does, we want to be ready, right? So again, there's a handful of different theories and thoughts, but it would make sense, of course, to me to see that low 30,000 or upper 29 range to be tested. And again, alternative to that, we do have this, 32,800 is the next key level Fibonacci based on a larger time frame here. So more substantial resistance level would be 32,800. Okay, so just keep that in mind. If the price does wake up there, that would be a great shorting opportunity. But between now and then, it would make a lot more sense for the price to pull back here and continue to bounce, or possibly even down here as well to 0.618. Once again, that low 29, upper 28,000 range. Okay. All right. I hope that serves you well. Thanks again so much for joining me here. Hope you have a great rest of your day. Thanks again. Also, continue to help us grow our Twitter. Greatly appreciate the new subscribers here. And again, like, retweet, follow the whole 9 yards here for a chance to win. Becoming a member, of course, of our community there for a free month. Hope you have a great rest of the day. Thanks again for your time. See you next one. Take care.